as I share this, let's just make sure that you guys can see my screen. There we go.
Looks good. Looks great on this end.
All right, perfect. So if I do that, there we go. You still got me and Kevin there, Kendall?
We do, but you're on the presenter one, so you want to swap that. Yeah, there
Yeah,
goes.
no problem.
Yeah, swap presenter view. There you
Like
go.
that guy there?
Perfect. Looks great.
All right, beautiful. Well, thank you so much for having us on behalf of Tax Hive, Protect Wealth, and my bald brother here, Kevin O'Leary. We're just grateful to be spending some time with you. And this is such a critical topic at this time of year, right? 2024, as Kendall just mentioned, the clock is ticking. It's almost December 31st. And why is that significant for you as a taxpayer? Well, eventually the clock, like an NFL game or an NBA game, eventually it expires, right? And time runs out. This is something that I'm like uniquely aware of this year because I turned 40 in a couple of days. And the clock seems to be ticking faster now than it maybe ever has. But I'm certainly grateful to be part of such an incredible organization here at Tax Hive. Kevin O'Leary is not just a face and a name with our brand. He's an equity partner in Tax Hive. So when you consider, and I wonder if my CPA or my accountant or the people that do my numbers every year, I wonder if they know what they're doing. I wonder if they understand the code. And you can just know here at Tax Hive, Kevin O'Leary, only partners with what we think are the best people in the industry, and would love an opportunity to serve all of you. But certainly today, my goal is just to deliver a bunch of value, educate you on what's happening on the taxes front. What are the 4 pillars to saving money as a business owner? And then I'd love for you to engage and participate as much as you can. I think there's a chat button, there's a Q&A button. Kendall, I don't know if you have a preference on where these folks put their
Yeah,
responses and interact with me, but either the
yeah, we
chat or the
do.
Q&A.
Yeah, our audience is usually so the chat is actually locked. That's how we communicate with you,
Okay.
with the students. But if you want to use Q&A, guys, jump on Q&A, ask any questions. You probably want to use it to leave to the end. Is that right?
Either way, I mean, if it's relevant, I may ask for some participation, and you guys can just put your response in the Q&A, even though it may not be a question, right? So
Great.
let's just get started with it, and I'll answer. This will be the first one. Hopefully, nobody participates, which is maybe backwards, right? But here's the question: how many of you pay 0 in tax? Anybody? I got Olga, who already raised her hand in anticipation of the question, but I see some of you are laughing at that question, right? We all pay tax. And so the follow-up question that I would love to see in the chat actually is, how much do you pay? Does anybody want to participate and just give me a percentage? How much do you pay in taxes? I'd love to know what, is it a 20%? Okay, Anna says too much. That's probably the right answer. Tom tells me 20%. Pinky says a lot. Liz here says 35%. Okay, that's interesting. Anybody else? You're welcome to participate here. Too much. I've got Terry at 15. Olga this year says 32%. Okay, so here's what I actually already can tell from the answers that have been submitted here. I said, how much do you pay in taxes? And immediately every single one of you thought, man, how much do I pay in income tax? But the reality is that you and I don't only pay income tax. We pay a whole lot more. What else do we pay? Well, we pay sales tax, we pay property tax, capital gains. You've got taxes left and right. Next time you fill up your gas tank, do a little search on how much of every dollar of gas goes to some version of a tax. Look at your phone bill. Everywhere you turn, when we buy it, when we own it, when we sell it, in the case of healthcare in this country, you're taxed if you don't buy it. And I'm not here to argue about whether those things are, ethical or moral. Just the reality is that at the end of the day, all of us, every single one of us, pays way more than income tax. And it might be safe for us to say, and if I pay 20, 30%, in income tax, that might be on a corporate level, right? The corporate income tax, thankfully, is still low in the 20s. But on an individual level, you're in a higher tax bracket potentially. And then all of those other taxes that I just outlined are not negotiable. This is if there's one thing that you should take away from this, it's that you're paying a ton in taxes, and there's actually only one portion of the taxes that is negotiable for you to do something about. I'll give you an example. When I go to the grocery store, with my 4 kids, I've got Ella, Will, Lincoln, and Lily with me. I can't tell the cashier, oh, hey, no. I don't pay sales tax because I've got dependents, right? You see these little write-offs right here? I don't pay sales tax. And I see here, hey, Anna, this is brilliant, right? She lives in the beautiful state of Florida where there is no income tax. And I get some of a tax discount for military, but I still pay too much. Yeah, the part that you probably pay too much in Florida, they get you somewhere, right? So no income tax, but property taxes are typically much higher in the state of Florida. You also have toll roads. Anybody been through a toll road, right? That's also a version of a tax. Any of you have a driver's license or your vehicle, right? Registration. Those are all taxes from our government. And so here's what I want to illustrate to you. We just talked, Kendall and I in the setup of this event, we were exchanging some insights. Even in his introduction to me, he talked to all of you about their summit and wealth accumulation. And I love the branding here that Don and Kendall have harvested for so long, which is protect wealth. You certainly need to protect your wealth. But at the end of the day, you may not have enough to protect. Some of you make money, you have money flow through your operation in your business. And then you look at your bank account and you're like, where did all the money go? What happened, right? So this illustration right here, you've probably seen this before. If you haven't, it's worth repeating because this right here is $1 that gets doubled every single year for the 10 years. And I know what you may be thinking, hey, Devin, it doesn't take me in my business 10 years to make $1,000, right? That's what's here on the screen. This is just for illustration purposes, but the point is going to hold true here, which is you as a business owner, you as just an individual, you know how to grow money, you know how to invest money, and you know how to make a return. And typically when you grow that money, right, it compounds or it has interest and it's yielding a return for you. Well, over the span of 20 years, my hope is that similar to this illustration, if you were doubling your money every single year, then eventually, maybe if you're fortunate, at the end of 20 years, you might end up with $1 million in your nest egg. And I know all of you realize, hey, in today's world with inflation and everything else, $1 million may not do a whole lot for you. It may not be enough. But here's the interesting thing about this illustration. We just showed you these numbers and outlined a growth over 20 years to get to $1 million. But all of you see at the top of the screen, we did this with no tax. And you and I don't pay zero in tax. In fact, we pay a whole lot more. And so what I want to illustrate to you here in this conversation is that we need to decrease your tax liability. We need to decrease what you owe. And I'm not suggesting that I can take you from 32% down to zero. But what I do want to show you is the power of just shifting the number slightly, having a even minimal impact on what you're paying every single year. And here's the illustration. If you're not paying zero, let's just talk about a 15% tax, 1-5. If you and I pay a 15% tax and we're doing the same exercise of doubling our money every single year, well, then at the end of 10 years, instead of $1,000, you end up with less than 500. But nobody's mad about it, right? Nobody feels like the government really, robbed you because you overpaid. No, you didn't really overpay. You spent $50 in taxes. So nobody's raging mad about that. But at the end of 20 years, the same calculation, the same 15% tax, instead of having over $1 million in your nest egg of wealth that you want to protect, wealth that you've accumulated is now less than $250,000. And what happened to it? Like, where did the money go? And I want you to, engage with me here. Jump back into the Q&A, tap that button. I want someone to tell me, where did the $750,000, where's the 800 grand? I want to know where it is. It's not in my account anymore. So where is it? Is anybody bold enough to participate in the Q&A and tell me where our money went? Because it's got to be somewhere, right? Who has it? Who got it? And okay, I've got an anonymous attendee that says, to the government and its projects. I appreciate your participation. 5 points to you. Anna says that, okay, there's a political reference here that I won't bear repeating, but I don't necessarily Yeah, thank you, Anna. I appreciate you apologizing. It's all good. But trying to steer clear of politics right now. Government waste and fraud and abuse is what Michelle said. Okay, the money didn't go to the government. Like, this is what's shocking about this illustration. Look in the bottom right-hand corner. $51,000 went to the government. And where did the $750,000 go? It went nowhere because it never existed. The money never had the potential to grow. The money was usurped, dare I say the word robbed, by a simple 15% tax. And when you and I just a second ago outlined, man, what do I pay in taxes? It's safe to say that most of us are probably having to make $2 just to keep one. But in this illustration, if we could just make a 15% correction, make a 15% adjustment or improvement on what you and I pay on income tax, well then, man, we have a lot more to protect. Our wealth accumulation over a 20-year span might look better than a couple of $100,000, right? And this is what I call a wake-up moment. This is like me grabbing you and shaking you gently, lovingly, but nonetheless shaking you and saying, hey, wake up. It's time to do something different. It's time to think a little bit differently about how you approach taxation and what you're paying every single year, because most of you just feel like you're handcuffed and you don't have any control over what you pay, when in reality, you have a ton of control. Income tax is very negotiable as a business owner if you know what you're doing. So nonetheless, I want to put you in the $1 million bracket, not the $220,000 bracket. How do we do that? It's with 4 pillars. Here at Tax Hive, we specialize in tax planning, tax strategy that helps you as a business owner maximize the deductions, maximize the code, all of the strategic credits and the gaps, and what you read on Reddit or YouTube about loopholes. These are all of the things that are legal, that are in the code. They're not loopholes. That's just a coined phrase for people that don't want business owners to take advantage of what's available to them. And at Tax Hive, this is our specialty. When Kendall kind of mentioned early on, hey, Devin, I noticed you play some tennis. Oh, no, I play pickleball. Well, this is a little bit like the difference between tax planning and tax preparation. We mentioned this, but I want to be ultra clear here. I'm not here to disparage the person that you're working with. The accountant, the CPA that you have right now is probably doing an okay job. Maybe some of them are doing an excellent job, and then others we won't mention, right? But at the end of the day, you've hired that person to do a specific task, which is tax preparation. They check boxes, they input numbers, and at the end of the day, they tell you what you owe. It's a little bit like the cashier at the grocery store. And so what I want to tell you right now is, don't be mad at your aunt or your uncle or your neighbor, whoever it is that's doing your tax preparation. They're doing what you paid them to do and nothing more. And you might say, oh, well, I meet with them occasionally, and sometimes they'll suggest to me, a home office deduction or writing off my corporate vehicle. Okay, well, there are over 1,400 individual deductions in the code. And unless your CPA specializes in tax strategy and instead of tax preparation, then odds are they're missing the mark, and missing it to the tune of tens of thousands, in some cases, hundreds of thousands of dollars for clients that we work with. So I just want to emphasize 2 different disciplines. If you want to keep working with your tax preparer, we have no problem with that. Tax Hive comes in as a strategic tax planner to take advantage of all 4 of these pillars and help you maximize your savings. So let me fast forward to the fun part of this, right? If there are 4 pillars, we can talk about deductions, and I'm going to talk about them. We can talk about credits and tax gaps, but let's just fast forward to the fun stuff, right? The dynasty strategies is where we really start to make a big impact. This is like, a heavy swing of the bat. This isn't a bunt or a single. This is where we hit home runs and occasionally some grand slams on the tax strategy side of things. So let me just show you one illustration really quickly on the dynasty side. These are some legacy strategies, some retirement strategies, or other investment strategies. This is what's called an accelerated donation. This is not, your local charity. This is not donating to your church. This is a very specific, qualified 501c3. Take, for instance, maybe the Red Cross at certain times that might qualify for something like this. And just for sake of example, let's pretend for a second pretend, because none of you have ever had this happen, right? Let's pretend that you owe the IRS $100,000. That's a big burden. And you might think, how can I pay less and not end up like Wesley Snipes or Al Capone, right? This is not a tax evasion strategy. This is an accelerated donation strategy where instead of sending 100 grand to the IRS, we then reallocate $50,000 to an eligible nonprofit. We make a donation. It's charitable. We're giving back in some way. We're supporting our community or some, portion of our region that needs some help. The nonprofit then gives you an accelerator on that donation that says, okay, hey, you donated the 50,000, but for tax purposes, you get a 4 to 6 times multiplier on that donation, which, just for sake of easy math, let's use a 5x multiplier. The 5x on our 50 grand would be a total deduction of $250,000. Let me be really clear here. We're not saving $250,000. We're getting a deduction of $250,000. So what does that end up? How does the math add up here? Well, we made a $50,000 donation. We got a total deduction of $250,000, and the deduction needs to then filter through our tax bracket. Let's pretend for a second that you're in a 32% tax bracket. That's an $80,000 savings, except, hold on, pump the brakes, don't get too excited. We still made a $50,000 donation. So the $80,000 in savings minus our $50,000 donation is actually a net benefit of $30,000 that's now sitting in your bank account that didn't 20 seconds ago when we started the illustration, right? We were going to send 100 grand off to the IRS. Now, in this circumstance, instead of the 100 grand, we've now paid 20,000 to the IRS. We've paid 50,000 to an eligible nonprofit, and the deduction ended up saving us a net of $30,000 that was in our bank account that wasn't there before. Just quick show of hands, if you can participate with me. How many of you would love to keep the 30 grand instead of paying the 100 to the IRS? It's a no-brainer. It's the most obvious thing. But unless you know who to donate to, unless you know eligible charities, you're not going to be able to implement this strategy. And your tax preparer is not in large measure, not the person that knows and understands who these opportunities are with and what 50C3s qualify for it. So let's move on. If we delivered, let's just fast forward for a second. If Hive delivered a tax plan to you, what would it look like? If we spent the time, if we did the analysis, if we did the forensics, if we went and looked at your last year's tax return and identified a bunch of new opportunities, things you're not currently doing, because most of you are probably doing something, but there's a whole lot else that you're not doing. This is the summary page of a tax plan. It's redacted. I actually know this client very well, but on this particular tax plan, there were just 2 simple strategies on that had an individual impact. There were 4 strategies on the corporate side, on the business side, to the tune of almost 30 grand in savings on just 6 strategies. 6. And on the individual side, do you think this client cares about the almost 17 grand in savings on the federal and state side? Do you think on the business side that this individual cares about keeping another, call it, I don't know, $12,000, $13,000, $14,000 in their business? Absolutely. So what exists within this tax plan? What are the strategies, and how do we identify and quantify every single one of these? Well, when we deliver a plan to you, it's not just the strategy name, like, Rule 280A, the Augusta rule, or the accelerated donation strategy. It's not just, oil and gas or conservation easements or all of these things that you might hear about and see on YouTube and Reddit. It's exactly how to document it, how to implement it, and what the number is. Like, just pretend for a second that I show you a strategy, X, Y, or Z. If I don't tell you the amount of dollars that you stand to save by implementing the strategy, then odds are you're going to look at the implementation and the documentation that it might take, and you're going to say, I just don't know if it's worth it. But if we show you the number of potential savings in your bank account by implementing, man, then the implementation is no longer painful. It's just a part of your regular business practice, right? So let's continue on here. I'm not going to wait till the very bitter end for me to introduce or invite you to do something. And I'll be crystal clear here. I'm not going to ask anyone for an American Express, MasterCard. I'm not asking you to buy anything. What I would invite you to do is simply, if this is a compelling message, if you know you have some gaps in your tax strategy that you're not utilizing the code to your advantage, then you should scan this QR code. You should go to taxhive.com/PW for Protect Wealth. This is a free, no obligation, complimentary, just on the house, based on our relationship with Protect Wealth. I'll have a tax strategist get on a phone call with you and outline for you what we do here at TaxHive, how we take a look at your corporate structure, your industry, your geography, what you do, where you do it, right? And we'll look at a prior year's tax return. If you decide that you want to, do some business with us, we'll do all of the forensics. And in this strategy call, we'll be able to outline for you what the opportunity likely is if you were to interact and engage with TaxHive. So that's my invitation to you. You don't have to wait till the very bitter end to do this. You can scan it now, schedule a call with my team, anytime this week. And I see here on the screen, what if you're retired and you don't have a business or an LLC? This is a fantastic question because some of you might be in different circumstances. Some of you are running and operating a business. Some of you are a high wage earner in a W-2, setting with an employer. Some of you are retired. Well, there are strategies in every circumstance, some of them larger and bigger in scope than others. Certainly, most of the tax code is specifically curated to a business owner. Why would that be? I usually get into this a little bit later, but I'll just touch on it right now, which is if you're a business owner, our government wants to incentivize that type of behavior. They want you risking your capital. They want you putting your intellectual property to work. Why would they want that? Because the economy needs you. The economy needs you to provide opportunities and jobs in your local area. And the government knows that full well they don't create jobs, we do. And if we're the job creators, if we are the innovators, if we're the ones that are the engine of the economy, then it makes sense that they would say, hey, if you'll do that, if you'll support us in providing jobs, well, then we'll give you a break on taxes. So to come full circle here, if I'm a W-2 wage earner or if I'm retired, right, then no doubt the strategies that might exist for the business owner may not be available to you, but there will be others. In some cases, there might not be anything for you to do because your tax burden is very minimal. Like if, depending on what your retirement situation looks like, you may not have a ton of taxable income and you may not really need a whole lot of write-offs. If you're a high W-2 wage earner, then the dynasty strategies no doubt would have application to you. These are the retirement strategies, captive insurance, mineral deposits, and other investments that can be made that garner not only a return, but a tax benefit to you. And we can touch on that a little bit further. Okay, Anna says, hey, I've not started my business quite yet. Finishing certification. Would you assist or guide me on what to do while beginning and starting my business? Absolutely. This is critical because a lot of times people delay these experiences and they say, oh, well, I haven't made any money quite yet, or I'm not quite in business yet. But Anna just told me right now, she's paying for certification, some education of some kind, some sort of licensing. Guess what that is? That's a business expense. You right now have the intent to profit. So long as you have the intent to profit, then to the government, you are in business because you have the intent to profit. And right now, Anna, yes, the important thing for you to do would be to bank all of those losses that says, hey, I'm operating a business right now, or I'm experiencing expenses related to my business and to my startup costs is what they would be deemed as. And we want to bank those as losses so that in future years, we can take those losses against future gains. Otherwise, you end up in years of gains. And if you don't have any losses or write-offs, then you owe more money, right? So definitely need to look at this in a forward-thinking manner. Taxes oftentimes for people is a look back and they say, oh man, what happened? What did I do? And their tax preparer says, well, you didn't do this and you didn't do this and therefore you owe this. Tax planning with TaxHive is forward thinking. We say, what can we do right now to help us when we go to file next year to pay way less, right? And so I'm seeing some more interaction. I love the Q&A section. Do you help find a business to start if we don't have one set up? We're not a business opportunity, group. We are a tax group. So you would need to source other opportunities outside of our ecosystem. I don't know if Protect Wealth might be able to help you with that, with some references, but we're certainly not a business startup group that's going to help you source opportunities. We're going to help you bank all of those either losses or write-offs, deductions, credits, and gaps, so that when you're in business, as soon as you start making money, you can pay as little as legally possible on that revenue, as the code will allow. So I just moved on from this. I'll show you that QR code one more time. I'll give you the URL one more time when we finish up. But this is something that's been really shocking to me. We have asked this simple question to over 80,000 business owners nationwide. We've said, hey, are you confident that your accountant is maximizing all of your possible deductions for your business and helping keep you compliant with the tax code? Over 60,000 of them said no. Like, pause for effect, right? 77% think that their accountant right now that they're working with isn't maximizing all the deductions. So let me just be crystal clear here. If you're not maximizing your deductions, let's pretend that over here on this side, this is where the code is. Like, this is what you could legally do: write-offs, deductions, gaps, credits, dynasty strategies. This is where the code says, oh, right here, you can't do anything more. And over here is all the way over here, out of screen, out of scope, is what your current accountant is doing for you on the tax strategy front. And you know what's in between all of that? It's all of your money. All of your money. Convenient for him or her, whoever it is that's preparing your taxes. Convenient for them to not really care because it's not their money, right? And again, I'm not trying to disparage them. They're just doing a different job. This would be like getting mad at the cashier at the grocery store because they didn't follow you around and tell you to go down that aisle instead of this one, or use this coupon instead of that one. And here's a rebate on this, brand of milk or this, product. They don't do that. And it's not because they're bad people. It's just because you're not paying them to do that job, right? So here at Tax Hive, that's what we specialize in, is all of the deductions, the credits, the gaps, the dynasty strategies. And I want to get into that a little bit here. I see in the chat, Wesley says, I've just got an LLC for my Uber and Lyft side hustle. I love this. This is something that everyone, should consider, which is your corporate structure matters and it has tax implications. So I appreciate you, Wesley, tuning in and being engaged here. Olga says, I want to exit from a construction business, an S Corp. We're going to talk a little bit about that. To dedicate 100% to our investments, and I want to create the right entity for a management company. This has tax implications, right? You need to have the right structure and the right entity set up. When you make that exit, there are tax implications, and there are ways to minimize your tax burden. You guys are phenomenal in the chat. I'm loving this. So thank you so much for the interaction. Another person with a contract to sell your business, better to close in 2024 or 2025 for capital gains wise. I'm always going to say, hey, defer to 2025 unless there's some kind of seasonality to and timing to your exit. It's a little bit of a loaded question there, but probably jump on a call with us. When you scan that QR code, when you have when you go to taxhive.com/PW, this is the screen that you'll see. There's a little video from Kevin. And the reason I want to show you this is when you go to the QR code or the landing page, you need to click the blue button that says schedule free consultation. That's that free call. We would love to have that conversation with you. Again, no expectation, really low. There's zero pressure. It's a discovery call. Let's see if we can help. Now, this question is the crux of my conversation with you, which is, if you know you have a tax problem, if you know your current CPA or accountant isn't really doing these things for you, then are you willing to do something about it? And I put the responsibility on you because at the end of the day, you've got to decide whether you want to keep overpaying, or if you want to go study the code and become a master of the code, or if you just want to partner with someone who's already figured it out, right? That's Kevin O'Leary in our firm here at Tax Hive. I feel like those are your three legitimate options. And option number one is what most of you have probably already been doing, which is overpaying, and in the back, in the dark spots of your brain somewhere, you tell yourself every year, this doesn't feel right. I shouldn't owe this. How is it even possible that I pay this much in tax? And then I hear about other people that are paying, less than 5% or less than 10% in taxes. And it's because you have no strategy, you have no planning, nobody's helping you. You've got to do something about it, and we're willing to help you. If you were to take option number 2, Kevin, my bald brother here, he would say, hey, shame on you if you don't plan for taxes. I'm a little softer than that. I'll give you a little bear hug and I'll say, hey, we can do this. Let's figure it out. But Kevin's just a straight shooter and he's not going to pull any punches. And so I'm not here to shame anyone. What I am here to tell you and to motivate you to do is to say, there's a massive, massive amount of money on deck, on the table, waiting for you to capture it if you'll just do something about your tax scenario. And in the 3 options, overpay, not a good option. Option number 2, master the code. There are over 6,000 pages in the tax code. There are over 70,000 pages of legislation interpreting the words that are in the code. So I will pray for anyone that wants to go that route. Option number 3 is obviously the fast track and the most convenient for those of you that are wanting to make a big impact of here. Now, what is the cost of doing nothing? This is hey, Devin, if I don't scan the QR code, if I don't go to taxhive.com/PW, if I don't sort this out, how do I know what it's costing me every year? Can TaxHive give me an answer to that? Well, we actually know the answer, maybe not to the precise dollar and penny, but I know it pretty darn close. And how do I know it? It's because we've delivered thousands and thousands of tax plans to business owners just like you. And we've aggregated that data to say, hey, when their business does X amount of revenue, what is the average savings that our tax plan identifies for them? And here's the chart. And instead of staying up in the clouds, I want your eyes to lower down on this graph to the black line that says business revenue. And again, forgive me if not all of you yet have a business, right? But as soon as you are in business, you can scan to whatever number on this chart that you think your business might do in gross annual revenues. And on the low end, you might say, oh man, I'm just kind of starting up. Is there any savings on deck for me? Yeah, on average, about $15,000. That's no small sum of money if you're a startup. That's the difference between staying in business and going out of business. The difference between making payroll and not making payroll. And I would argue that $15,000 is probably just as significant, if not more significant, than the high, business earner on the far right of this chart that has a couple $100,000 on deck for them to save if they will just simply plan for their taxes and strategize in advance, right? This is forward thinking. We got to be proactive. This is the cost of doing nothing. And I want to be clear about what the tax code is. We've talked about this briefly, but let's be ultra clear about this. The tax code is not your enemy. The IRS is not your enemy. It was actually written to incentivize investing. If you're willing to risk your capital, your time, and your expertise to start businesses and to employ other people, well, then our government has written all the words out to say, these are the benefits of being that type of person to help stimulate our economy. And the reason they do it is because they know that 2/3 of the jobs in this great country come from small business owners, that 40% of the economic activity in this great country come from small business owners. And the IRS, while they get a really bad rap and a bad name, and maybe we should abolish the IRS, I'm not going to go there, but so long as they exist, they are the world's largest debt collection agency, right? They have unshakable power to seize and procure, do all kinds of things necessary to get what they are owed. But let's be clear here. They don't want, nor do they expect, maybe they want it. They don't expect, and legally, they can't capture a penny more than you legally owe. And that is the gap between the code and what it actually says and what your current accountant is likely doing. And the gap is all of your money right now. So let's be, serious about this. Let's tune in. I got another maybe 10 or 15 minutes with you, and then let's wrap this up. As a taxpayer, you have 3 options, and I'm curious to know which of these you like the best. Do you want to pay taxes now? Would you rather pay later, or how many of you would prefer to pay never? Anybody in the chat? While you're pulling that up, I'm going to look at a couple of these questions that are here. is the consultation for an ongoing relationship with TaxHive, or are you able to be honored for one tax year? Yeah, you can. There's no contract. The consultation, you can have an ongoing relationship with us, or it can be very short term. Do you help W-2 employees find tax planning strategies? Yes, we do. There are basic 12 deductions that you can capitalize on, and then there's a bunch of dynasty strategies. Emily Chen says, can you help sole proprietors? Yes, absolutely. No matter your corporate structure, we can help you. And then if you don't have a business, we have a commercial rental property. Yes, rental properties definitely have tax implications. So nobody has participated, though, on my most recent question. Oh, here we go. A couple of you have. Never and never. We're 2 for 2 on never. Nobody wants to pay now, but as a W-2 wage earner, that's what you pay. Some of you file quarterly returns within your business, right? You're paying later. Most people think that never is not possible. And I've asked this question a lot. They say, hey, how do I pay never? Well, you can, option number 1, make $0, like don't make any money. And that's true. It's just a really horrible goal, right? How much money do we want to make? We should want to make all of it. And so if we make as much money as we can, how do we pay never? Well, you may not pay 0, but a dollar that flows into your business, it is possible to pay never. The way that you pay never is right here with these standard deductions, credits, gaps, and dynasty strategies. So let me give you and illustrate a couple of these examples with you. On the accounting side, let's be clear about what TaxHive does. We're an advisory services firm, first and foremost. We advise and strategic planning. We help people save money. You can get tax preparation and bookkeeping wherever you'd like. But if you want to do that with us, we also do tax prep and bookkeeping. We'd be happy to keep you compliant with the tax code. But we specialize in advisory services and tax planning. We're a reputable company, as you know. Kevin O'Leary wouldn't partner with us otherwise, but thousands and thousands of reviews, Trustpilot, Better Business Bureau, A+ rating, whatever that means to you. I'm not going to spend too much time on this. We could go through reviews for days, but at the end of it, it only matters to you if we can save you money. So let's talk about these deductions. Deductions is the most common strategy that people find on social media. You'll see it on TikTok, on Reddit, on YouTube, and people will tell you about the home office deduction. They'll tell you about writing off a corporate vehicle. Well, right here, this client, Carrie, and her notary business got a tax plan from us. It included standard deductions like employing your kids and other things like that, but it also included other things like bonus depreciation, like an S election on her corporate structure. A small tweak to her corporate structure had tax implications. Also included Rule 288, which I'll talk to you about here in just a second. But here's what I want to emphasize here. Over $28,000 of identified savings, and over the span of the next 5 years, likely $140,000 that Carrie could potentially keep in her business rather than shipping it off to the IRS. But we're missing the most important part of this entire slide, which is how long has Carrie been doing this? 20 years? 20 years. And just now, tax planning. 20 years. I don't know what her revenue looked like in those prior 20 years, but in the year that we met Carrie, $28,000 of identified savings in her tax plan. Think about the cost, the opportunity cost, the money that wasn't infused into her marketing, the money she wasn't investing in rental properties, the money that wasn't growing over time for 20 years that she just unknowingly shipped off to the IRS because her tax preparer just told her that's what she owed, right? This is the reality of doing nothing. And here's a small example: a commercial cleaning business out of Missouri, $9,500, probably matters a ton to this small business, this small operation, to keep about 10 grand in their business that didn't exist before. On the deduction side, I don't want to skip past this, but over 1,400 deductions. Most business owners right now are typically taking advantage of 1 or 2 that they came across. And here's the danger of implementing a strategy that you found on social media somewhere or on a thread somewhere. They're not necessarily teaching you the most lucrative way to implement that strategy. There are 2 different ways to do the home office deduction. There are different ways to write off a corporate vehicle. And there are better ways and not so good ways to do those things. The thing that matters here is that if you work with professionals, you're going to know which of those A or B scenarios is more of a fit for you and your business and is going to save you more money. And then in addition to that, there are all kinds of deductions that you may or may not be eligible for that in the absence of a tax plan, you just know nothing about. You're not going to find them on social. You're not going to find them on, threads on Reddit. These are things that are specific to your geography, your corporate structure, your industry, all kinds of gaps, credits, and deductions that are very, very isolated and specific. Let's talk about a few of these strategic credits. This is a tree service out of Florida, 15 years in business. And you say, strategic credits, like what is a tax credit? Well, I'll tell you one that everyone is familiar with, which is the employee retention credit. You all remember the ERC credit because of COVID, right? Which said, the government said, please, 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 please don't fire your people. Just keep them, pay them wages. And if you do, we'll give you a tax credit on all of those wages up to a certain amount, right? There were limitations, of course, but the ERC credit put tax credits back on the map. The work opportunity tax credit simply says, hey, if you hire certain people in certain areas or regions and, opportunity zones, there are tax credits and tax implications, savings for you if you employ people in a work opportunity tax credit area. There's the vehicle plug-in tax credit, going solar, right? Residential solar, commercial solar, EV chargers, battery backups, they all have tax credits, both on a federal level and in a lot of cases on a state level. These credits are sitting in the code right now and very likely available to you as a business owner to take advantage of. The R&D tax credit. This is a research and development tax credit. Certain industries, this energy sector business out of California, Elias and his group were able to identify the R&D tax credit as something they were eligible for, which helps cover payroll and other expenses related to their research and development in certain industries. Now, when I show things like this, I oftentimes get the, like in the back of my head, I'm thinking of Twitter or X when people are like, oh man, shame on these billionaires that pay so little in tax. And okay, I don't know, but what they're doing is they are being compliant with the code. I don't want to get into an argument about whether it's ethical or not. I'm just saying the code is indifferent. It doesn't specifically cite Warren Buffett, Jeff Bezos, or any other billionaire by name in the code, right? The code is all of the deductions, gaps, credits, and dynasty strategies that regardless of your name, if your business wants to take advantage of them and they are eligible for it, then you can. And this is like a massive misnomer that these people are just, snakes and doing sneaky things. It's like, no, they have a team of advisors. And what we do at Hive is we take strategies that are typically reserved for Fortune 500 companies and the ultra wealthy, the big businesses out there, and we bring it to the small business owner at scale and help them save money. So this third pillar, tax gaps, what does this look like? Well, here's a real estate broker out of Kentucky, 26 grand in tax gaps and other strategies as part of the tax plan for Alva. A tax gap, commonly known as a loophole, is actually just a gap in the code that says, hey, if you'll make this election on your corporate structure, if you'll take advantage of Rule 280A of Section 179, there are these gaps that allow you as a business owner to save money and pay less in tax. Let me give you a very real example of one that shows up for Alva and for Tam Lin and a handful of other businesses. Here's the example. You should all put this in your notes. If you haven't heard of it before, it has almost universal application to a business owner. You own a home. And you can rent your home out to your business for up to 14 times for 14 days. It doesn't have to be 14 nights. It can be 14 times a year. You can rent your home out to your business for a business purpose. Think of your house like a Marriott or a Hilton banquet, meeting room, okay? They're no different. You have to actually host a meeting. You'd want to document it, take good notes, maybe have AI be your note taker. You as the individual would invoice your business for using your space, your place of residence for the business purpose. You might say, "What? Hold on a second, pump the brakes, Devin. I can rent my house out to my business 14 times. Where in the world did this come from? Who thought of this? Like, what lobbyist approved this legislation, right, and got it into the tax code? Well, it's commonly known as the Augusta Rule. And I don't know if this is kind of rumor, but most people call it the Augusta Rule. And most people assume that it's because of Augusta, Georgia, where the Masters takes place, which is a golf tournament, arguably the largest golf tournament in the world. Well, if you're a homeowner in Augusta, Georgia, and the biggest tournament in the world comes to town for about a 2-week period leading up to the tournament, and then the celebrations and the parties that follow the tournament, do you think that you might want to rent your home out for 14 days or 14 nights to someone else? And man, if you could just know the right person to make a phone call to in government, that they might be able to get you those dollars tax free. Yes, that's exactly what's in the code. It's Rule 280A. It's not the Augusta Rule, but the common name for it, the nickname, is the Augusta Rule because that's what's rumored to have happened. Here's how this works. As an individual, I rent my house out to my business. I need a comparable. I need a reasonable, amount of money that is the going rate for banquet space or, meeting space or whatever it is that you're hosting at your house. The most convenient place to do this is peerspace.com. I'll spell it PEERSPACE.com. Peerspace.com is a point of reference for you, because if you implement this strategy, you say, hey, I rented my house out to my business, it's an expense to your business, so the business can write it off as an expense. That's number one. And on the other side of the coin, for you as an individual, that income is tax free. That's in the code. Tax free to you as an individual, write off deduction expense, write off deductible expense to your business on the business side. It's almost like a little bit of a double whammy. But here's the deal. You have to use a reasonable rate. Peerspace.com is your point of reference. It is your appraisal. It is your comparable to say, yo, hey, yeah, IRS, I did the right thing. Here are my documents. Here's my proof. Here are my notes from the meeting. Here's everyone that attended. In fact, here's a couple of photos of us at the meeting. And hey, by the way, I used these rates and I documented them from peerspace.com. That's just one quick, fast strategy that everyone should be implementing and utilizing. And I see here, no, it doesn't matter if S Corp, C Corp. I mean, does it matter? Yes, S Corp and C Corp, they have implications, different tax implications, avoiding double taxation, all of those things. And oftentimes when I have a S Corp, C Corp question, people are like, well, if the S Corp is better, why does the C Corp even exist? There are other purposes and advantages to a C Corp. It's just not as common for a small business owner to have interest in a C Corp. Do you have to issue a 1099 to yourself from the business for the payment made for the Augusta Rule? Yes, just like any other invoice. But the 1099, you're gonna have a document, and you're gonna utilize the code on the Augusta Rule, and it's not going to be taxable income to you. But you want to document those payments. You're gonna want to invoice your business just like the Marriott or the Hilton would, and you're gonna bank those dollars, but they are tax-free to you as an individual. All right, on the dynasty strategies, for any of you that got in late here, I don't know if we missed this, but I'll fly through this really quickly. I showed you an accelerated donation strategy, which essentially said, instead of paying the IRS $100,000, we can utilize the accelerated donation strategy, pay the government $20,000 in taxes, make a $50,000 donation to an eligible charity, get a 5 times multiplier on our $50,000 contribution. And when we run that through the filter of our tax bracket and the deduction of $250,000, then it was an $80,000 savings, but we donated the $50,000. So it was actually $30,000 that stayed in our bank account. I know I'm flying through this, but I just want to reiterate it one more time. Dynasty strategies are the things that I think a lot of CPAs or accountants start to kind of, I don't know, like, can we do that? And I'm not an expert in this, so I'm going to steer really clear of all of that. That for you is a clue, what I call a clue. We deliver thousands and thousands of tax plans to business owners. Do you think if we were delivering thousands and thousands of plans, that we would be doing anything that was skirting the edge of high risk, red flag, audit triggering. We don't do any of that. Everything that we do is highly legal, has legal precedent, is documented, and has been done thousands and thousands of times. And we put our clients in a defensible position that in today's day and age, if God forbid the IRS ever came knocking, nobody wants that knock at their door. But typically today, what an audit looks like is a paper audit. It's what we call a verification. And they say, hey, it looks like you implemented this strategy. Can you provide us the documents for it? Yep, here they are. We did everything above board, and they go on their merry way, right? So you got to do it by the book. You got to do things the right way. That's why people partner with TaxHive, because we know exactly what to tell you, how to document, how to implement. So here's another example. This is my friend Junius, actually. I know this guy pretty well. He has a great business in Georgia. His tax plan had Rule 280A. It had an S election on his corporate structure for his LLC. It had, I think, bonus depreciation identified in there and other dynasty strategies to the tune of about just over $29,000 over 5 years, $147,000 of potential savings for Junius in his Veterans Disability Assistance business in Georgia. Nothing, small about that. Definitely significant dollars. Oh, hey, a moving company with over $73,000 in potential savings. These numbers are real. It doesn't matter what industry you're in. It doesn't matter what, I think a lot of people look at a moving truck driving by and they're like, I'm bigger. I probably do. $73,000 of tax liability that without a plan, they would likely be overpaying in taxes. So again, what is the cost of doing nothing? Or maybe the flip side of that coin, what is the reward of doing something? This is on average the savings that we identify in a plan for a customer. And when you have a strategy call with us, we'll outline this to a little bit of a greater detail for you and kind of get a little more specific. But suffice it to say, when you do business with TaxHive, we like a win-win. We have a guarantee in place that says, hey, if you do business with us, whatever the cost of that might look like, just for sake of math, let's pretend that, doing business with TaxHive is $1,000. Well, when we deliver a plan, we're going to warranty or promise, guarantee identified savings that are double, triple, or more than the cost of your plan, so that hey, I'm making a reasonable bet with TaxHive that they're going to find me more money than it's costing me to get the plan. And doing that by double or triple is a super, super safe bet. We only make bets we know we're going to win, right? And in some cases, sure, we've had a few instances where we go do the forensics, we do the analysis on a prior year's tax return, and they're paying zero. We can't make them better than zero, and we refund their money because we weren't able to keep our guarantee of double or triple identified savings. So this is the cost of doing nothing. It's also the reward of doing something, is keeping more money in your operation. And if you remember in our original illustration, the power of just a simple 15% shift in what you owe every single year is, over time, significant, substantial dollars. So I'm seeing a few more questions in the chat. As I wrap up here, I'm going to address those questions. Kevin would tell you, you work so hard to grow your business. Don't overpay on taxes. Like, this is something that's well within your control to minimize. And I would ask it this way. As a business owner, what are your most expensive line items on your profit and loss? Like, if you get to the loss section and you say payroll, rent, cost of goods, somewhere in there is taxes. And odds are that's the one that's very sizable. It might even be your largest expense in some cases. And it's the one that you have the most control over. Let me just outline it this way. You can't go to your supplier or your wholesaler and say, oh, I actually need these products, at a 15% better margin. They're going to laugh you out of their warehouse, right? If you go to your employees and you say, hey, payroll, hey, we need to make a 15% decrease to everyone's pay, and it's effective immediately, right? You're going to have everybody march out of your building. If you go to your landlord, are you going to renegotiate your lease and get a 15% better deal? Probably not. Taxes is the fastest way for you to give yourself and your business a raise. It's the one that you have the most control over, and we would love to be your partners on the tax front. You work so hard to grow your business. don't overpay on taxes, do something about it. And we're the best to help you at it. I mentioned this question up front. This is the final question of, are you willing to do something about it? And if you are, you're in good company with Tax Hive. We'd love to help you with that. So let's get to these questions. As I jump to the questions, scan the QR code, go to taxhive.com/PW. We would love the opportunity to just have a conversation with you and see if there's some opportunity, some fit that might be, synergistic between us and you to help you pay less in taxes and help you keep more money in your business. You're going to grow that money over time. You're going to invest it. You're going to put it into your marketing. You're going to retain better talent. You're going to pay better distributions to your partners. You're going to have more opportunity with more money. We'd love for it to be in your pocketbook rather than the IRS. So let's address some of these questions. Do you help people in all states? Yes. And we do tax prep and bookkeeping in all 50 states. No problem. Does it matter if you have an S Corp or C Corp? I think I addressed this one. Yes, it matters. They both have different tax implications, and we could address that. But typically for a small business owner, an S Corp is usually the route that they go. It's not in all instances, but in most. Does it matter how much income business makes to take advantage of the Augusta rule, even if making very little, less than 10K? No. I mean, you can, if your business makes 10 grand, well, then you probably have other expenses that might already, be a deduction or a write-off against that $10,000. You're not really in a really sizable tax scenario at $10,000, right? You may say, hey, Devin, I owe $10,000 in taxes that I'd prefer to not pay. Well, then, yeah, let's generate another write-off and pay yourself. It's not a distribution. It's not a W-2 wage. You're going to pay yourself as an individual for the convenience and the hospitality of your home, and you're going to do it tax-free. And I would say any business that has a target to do, 100 grand in the next 12 months should be scheduling this call, should be jumping on board with us and having that conversation, initiating that conversation. All right, where are you located? Does it matter what state or city I'm in? Doesn't matter where you are. Our headquarters is in Utah. We have all of our support staff and all of our tax advisors in the lower 48. We have some people that work out of corporate right here outside my office. We have others that are remote, but we don't outsource to, third parties or to any other country. Everything that you would experience is in-house right here with Tax Hive. I have many questions. What is my next move? Wesley, just scan the QR code, go to taxhive.com/PW, schedule that call. We would love to take care of you. I promise you that call is going to be very enlightening, just like this conversation was. And we would love the opportunity to earn your business if there's a right fit. If you have that conversation and it's not the right fit, no problem, right? But odds are for a lot of you, man, we're going to have a great relationship and we're going to save you a ton of money. All right, Sonia says, I'm already mad as I had to send a check of 112 to the IRS 2 years ago. I could have done Dynasty. Yes, absolutely. And I think that you meant by the 112, you were talking 112,000, not $112, right? That's definitely a pain point. And sometimes people say, hey, can I reach back? Can I claw back money that I paid? Tax planning is, again, like a game of basketball or football. Eventually the buzzer sounds. And there are very, very few instances where you can go and file an amended return for strategies that you didn't implement, right? That's the challenge. You had to have implemented the strategy in the year of that, in that tax year. And if you didn't, there's not a whole lot you can do. But looking forward, and let's change our behavior, let's change our strategy and handle it a little bit differently. All right, let's see here. Is it better to charge rent than do home office deduction? Okay, very good question, because in some cases you can't do both. And it would maybe depend on what the going rate is on peerspace.com. Also, what is the square footage of your home, right? Because a home office deduction is just the square footage of that space, and doing some calculations on that side. Lalila, we can help you with that, kind of analyze that. And I would say in most cases, it's probably better off to just do the Augusta rule. It's a lot cleaner and easier. But in some instances, sure, the home office deduction might be more beneficial to you. And there are a few scenarios where you can technically do both. I will say this on the Augusta rule, that's the one that people get really excited about, as they should. But there are some times where people say, oh, hey, I have 4 businesses and I have one house. Can I do, 14 times to each business? No, no, no. It's 14 times per household, like per residence, right? So if you had some other rental property and stuff like that, then yes, you could utilize those for that purpose and save some money there. But it's limited to 14 times in a singular year. And with that, I think we've covered a lot of ground. We've unveiled a handful of strategies that it looks like we're enlightening to a few people here. I think we got to most questions. And Kendall, I see the smile and the nod of the head. I think maybe mission accomplished here tonight. And if you haven't done so already, just scan the QR code. Again, there's no risk, there's no obligation. We're not going to twist anybody's arm. We're just going to simply say, hey, is it a fit? Are we the right fit for you? Is it the right timing? And if not, hey, then let's look to the future. But man, we'd love to engage with you. And like I said, the clock is ticking. I'm about to turn 40, and the year is about to expire on you, here December 31st. And so let's do something about it. Kendall, I don't know if you're laughing about my age or my hair today. I had a bad hair day, bud.
Little bit of both, buddy. I mean, 40 with 4 kids, man, it doesn't get more real than that.
That's right. That's right. Yeah, yeah. 4 is my lucky number right now. So, hey, Anna, I'm glad to see you scheduled. We look forward to chatting with you. We're going to take great care.
Yeah, so we have a lot of students on here. A lot of you in the past maybe have scheduled or are looking to schedule. We really love TaxHive because it's a free consultation. You have nothing to lose. It's a great thing to do if you want to know if you're going to save any money. And sometimes, like you said, Devin, you can go back and look at different years potentially. There's things you can do going forward, going backwards, and at least look at what you're doing right now. If you're not doing that, you're probably missing out on a lot of money. You mentioned your accountant or CPA. A lot of our students already have them. The problem is, like you said, a lot of them are very conservative. They're analytical, they're accountants and CPAs for a reason, right? So they're conservative. A lot of them don't do anything what's considered to be more deductions they've never thought of. Well, that's what TaxHive does. It's all there in the tax code. So your team, what happens when they schedule the call, Devin? Someone calls them. What do you need with them? You just need some tax returns. What's the best way to do it with them?
Yeah, so the initial call is just a discovery call. It says, oh, hey, tell us a little bit about your situation. What are your investments like? What do you own? You have a couple rental properties. You've got a business. Okay, how much revenue is flowing through that business? It's an assessment, right? An analysis that would give us an initial gauge or pulse of, okay, well then based on that, if you engage with TaxHive, odds are we're going to identify somewhere in the ballpark of X amount of savings. And if you're willing to take a risk on us, we're ready to go to work for you and start to save you, a ton of money. And here's the maybe parting words with this. Again, I don't think anybody, if you're happy with your CPA or accountant, you don't need to fire anyone. TaxHive can work right alongside your existing CPA if you're happy with them. What happens in a lot of instances is we'll deliver a plan identifying all kinds of opportunities. And then you waddle into an office with your current CPA and you say, hey, good news, I'm going to save a ton of money. And they're a little bit embarrassed. They're not the one that presented you with these opportunities. They get a little bit defensive sometimes. And that's sometimes just a clue. And other times it's just hey, I'm going to deliver better documents. I'm going to, deliver better information to you at the end of the year when it comes time for me to file. And I'm just going to save myself a ton of money. And, anybody that balks or that might say, oh, I'm not comfortable implementing that, it's just because they simply haven't done it before, or they're just a little bit, I don't know, gun shy. It's not their money. And we're not going to teach you anything that is going to get you in hot water. Promise you that. Everything is, by the book. We're certified, licensed. We got all the expertise that you can dream of. And we're going to be doing it the right way for you.
Yeah. And so remember, like you said, your accountant or CPA is only as good as the information you're currently providing them. If you're not providing them with good information, they can't get you better deductions. That's just how it is. So that's what TaxHive is good at, is helping you find out what you need to be providing your accountant or CPA so you get more deductions. I love it. It's a free consultation, guys. You have nothing to lose. A second opinion. Definitely suggest you do it. And it's true, Devin. A lot of you on the call, maybe you've seen some of our TaxHive webinars in the past. There's nobody smarter. Gene, is one of the smartest tax guys I've ever seen. He kind of does a lot there at Tax Hive. I know he's kind of over a lot of your team there. I've never seen anybody know the tax code like that guy does. And you have
I
a lot
watched
of
that
other,
guy through the fishbowl here. The windows in our offices kind of face each other, and
yeah.
yeah, man, the sparks are flying in that guy's office every day. He's just a wizard, man.
So we know you're in good hands. You've got a lot of good people. I know a lot of your people there have worked at the IRS in the past. It's not about, oh, you can't deduct that, it's too scary. No, it's in the tax code. If it's in the tax code, you can legitimately deduct it, then do it. That's what they can help you find. So we love it. Devin, thank you so
Hey,
much for your presentation tonight. We really appreciate your time.
I'm so grateful and appreciate you having me on. Hopefully, I was a little more entertaining and captivating than Gene or anybody else with tax I've had on previously. But
I won't tell Gene. You know
yeah,
what?
yeah,
Just different.
yeah.
Just different.
He knows. Don't worry, he knows. But yeah, I appreciate everyone's interaction. Thanks for being so generous to me with your participation,
Thank
and
you.
just absolute salute to Kendall and Don and your whole group. We love what you guys are doing, and your people are always so great to work with, and we look forward to the opportunity of earning your business, serving you in any way or capacity. Tax planning, tax preparation, or bookkeeping. Keep us in mind, and we'll see you on the next run.
Well, thanks again, Devin. We really appreciate you and Tax Hive and everybody there. Everyone else, thank you so much for being on. We'll send you more notifications about upcoming webinars. Really appreciate your time tonight, everybody. Definitely schedule a call with Tax Hive. They're great at what they do. Everyone, thanks for being on. Have a great night.
We'll
Thanks,
see you
Devin.
all. God bless you.
Take
Thanks
care.
so much. Bye bye.
Take care.